We're going to have more of a fireside chat than a panel here. I guess, Ojas, your announcement that we're going to take time to get this aesthetics let a lot of people actually take a break. So I have to be doing a doubly good job of protecting this, the next 30 minutes or so with the discussion here. So we actually have, there was a discussion, there was a question that was posed in the last panel about how digital innovation has been more retail oriented and what's happening on the corporate front. And a lot of colleagues in this room today would agree with me that a lot of digital transformation work has been happening, particularly in the transaction banking space. I have with me someone who actually has seen it all from the days at Lloyd's, when he actually has seen a very different era to what he's been driving now in what I would call as in the trade transaction banking space. Ladies and gentlemen, please put your hand together to welcome on stage our guest, Paul Baker, Acting Group Head of Ops, Bank ABC. Thank you, Paul, for being here with us. I wanted to start the discussion with a slightly different note, if you may, right? I mean, there's been a lot of discussion in the morning that we've had about what's happening with the digital transformation journey, what's happening with fintechs, and what's happening and comments about corporate and retail banking transformations and so on, right? But may I actually, it would be very useful if we were to step back and before we actually get ahead of ourselves, just get a perspective on how things have evolved over the last many years. You've obviously seen it from the days where we've seen trade has been the primary area of focus to what we're seeing now as things evolve from transaction banking, and you've seen this not only in this region, but you've seen it in other parts of the world. So if I may request you to maybe start with a little bit of overview on how you've seen things evolve, Paul, and that will set the tone for the rest of the discussion.
Thank you, and thank you for inviting me along today. I guess it's time to go analog. I think let's go to a previous century when I started as a young,
that sounds really
youngster walking into a bank in Birmingham. And I think it's a really interesting question to see how things have evolved. And we've been talking today about payments taking seconds. And I just want to take you, and we've been often focusing on time, but I'm going to bring in cost as well. So go back a number of years, and there would have been a request for a payment. And let's say an international payment. We used to call them express international money transfers. And typically, we would say to a customer, that will take 3 to 5 working days. And let's put this in BD, that will cost you about 25 BD. Today, this morning I was sitting on my couch thinking, what time shall I leave to get down to Zalak? Oh, I need to make a payment to my bank in the UK. I made the payment. I got in the car, I forgot about life, and I know I got in the car before my team got into work. However, before my team got to work, I had a push notification when I got out of the car that it was in my bank account in the UK, and I think the maximum we're charging on the island for those types of payments at the moment is 5 BD. So it's not just about the 3 to 5 working days, it's about the cost, and then it's the time.
Convenience, yeah.
And I know the only friction might have been at the receiving bank's end because of clearing systems not maybe being up and running at that time. But I know that within seconds it was out of Bahrain and sitting in a bank in the UK. So that's a real very quick time lapse. But I can talk endlessly about transaction banking about when I first went to the UAE. It was around the financial crisis, around 2007, 2008. There were people walking around with suitcases of checks to and from the central bank. There were things called salary letters, whereby you used to have this big long list of salaries. You would just do one transfer to the other bank, but the actual breakdown would be literally on a letter. And if you were lucky, it got onto a floppy disk. Okay? So, and I think after 2007, 2008, things very quickly moved forward in the Middle East, going from manual to much more automated. And we quickly saw the adoption of image check clearing. We saw the adoption of wages protection systems and other EFTS systems to the modern day, where we've got people from benefit here. And you know, if you don't finish a payment within 15 seconds, you've got a 10 BD fine that you're going to have to pay. So, you know, it is really come on a long way. But we're talking payments, and a payment for a corporate is the same as in the retail space. So payments, we have really moved forward, and I think, you know, Bahrain, we're very tech savvy. We talked about the penetration rates of people with smartphones and things like that, and everybody's now using, let's call it virtual money on the island. But with all of that happening, I still have in my office people coming in with big sets of documents on letters of credit, and whilst the technology is there, the adoption rates in trade finance and places like that is nowhere near as much as in the payment space. So evolution, fantastic evolution on payments, but much slower on some of the other supporting products.
No, that's, I mean, that was a jog down the memory lane. I guess a lot of people out here would relate to some of the stuff you talked about from, I mean, analog days, as you rightly called it, right? I mean, from what we used to see. And you made a very interesting comment about how payments has evolved, but there are areas that need to catch up, right? And let's take this a little more deeper, and let's talk about these quote-unquote traditional products, so to say, right? I mean, we're talking about trade, we're talking about settlements, you know, we're talking about liquidity. These have existed for a long time. None of them are new, right? But what we are seeing now is we are seeing this evolution of this quote-unquote transaction banking space that has sort of bundled a lot of these in a way that actually is making it more granular, making it more specific, making it more productized, if I may. And that's some kind of a transition in itself from what we used to see in the past to where we are now, right? So how do you, I mean, if you were to actually view these changes and you were to give it a perspective from your own experience, how would you see this transition happen from individual products to what we are now seeing as an offering that in itself is actually of far more significance in the marketplace?
It's a very big, long question.
Please, take your time.
So let me pick off different areas. So again, you know, we talk about payments and how do we go from seconds to atomic, you know.
With the fine as well, yeah?
Yeah, and I think, you know, if we take that, what are the three things which are most likely to hold up a payment? One is data quality, two is liquidity, and three is compliance. So the banks are working on this and collaborating with fintechs or other banks. We're working with JP Morgan on their coin, and you know, the ensuring that the data quality is there, and that if you can settle atomically, liquidity gets easier. It doesn't solve the problem, and working on compliance systems to make things easier there. I think with regards to with trade finance, for example, we've seen attempts at blockchains with, say, Contour. I think there was a mention of an Abu Dhabi bank earlier who I know have been using Marco Polo. Ourselves, we have partnered with a company called Comgo, who is a multi-bank trade finance platform. Again, these are all cloud solutions, and really partnering with them and trying to be much quicker to market, and integrating those with our more traditional systems, and then supply chain finance. I think we heard a couple of other people just touch on supply chain finance, but there are schemes like Kayash in Egypt, and we've partnered with a company called Qualco, where we're trying to develop, make things a lot easier on the supply chain finance side, front to back, where we have the customer able to upload their invoices, but we can process them a lot quicker, do the drawdowns a lot quicker on the lending. But actually, our biggest problem is at the settlement stage, where we have all sorts of money coming in, and we need to work out which invoice it matches up against. And actually, we're using now this application to allow the customers to tell us that amount relates to this invoice, this invoice, and this invoice. So we actually are using the technology to make life a lot easier for ourselves.
Interesting. No, so what you're saying is that you actually have, what we are moving to as an era is where fintechs are providing what you would see as sharp solutions that actually are zoomed in and focused on specific areas, and you could actually collaborate with multiple of them. Is that what?
Absolutely. And I think another example of, and in my world, the operations world, the more boring bit, if you like, where we are collaborating with a fintech at the moment on the whole trade finance life cycle, and particularly the document checking and all of the compliance checks that you need to do around that. So we're using them to help with whether it's dual-use goods checks, whether it's vessel checks, whether it's price checks, and ensuring that using OCR technology with AI to pick up names off documents, so we can sanction screen all of those names in a much more robust way than we have done in the future. Still using humans to validate the information that we pick up, but using the technology to aid us, and then actually allowing the machinery to have a go at checking the documents. And by doing that, we end up having our colleagues really looking at the false positives rather than actually having to traditionally check a set of documents. So there's some really interesting stuff happening around there.
Very interesting. I mean, I guess, in fact, this was a question that came up even in the previous panel, right? I mean, we're talking about fintechs today, and we're seeing two types of technology players here, Paul. We're seeing the traditional large players, and we're also seeing a lot of new age fintechs, and some of them which you were alluding to, right? Would it be fair to say that banks are more open to embracing multiple fintechs and be look at a partnership of this fintech ecosystem now than before? Would that be, and not necessarily about your bank, I'm saying banks in general?
I think we're open. We have to do our due diligence on all the on the fintechs because you know they've got to be around in time to come. But you know we definitely it's the expression partnership is so important.
Yeah.
There's another piece of work I'm doing at the moment where actually the integration is a bit tough. It's tougher than what we thought, but that partnership and working with them to develop how best to integrate the systems with the APIs and things like that, it's so important. So yeah, I mean we use a combination of large fintechs and smaller fintechs.
Yep.
I noticed on one of your slides earlier that with ELA, we have partnered with Jumio. They are solving one of the problems with ID and V. Interesting that maybe that will evolve on the island further in the years to come. But there, there are lots of areas where we can collaborate and use a combination of bigger players and smaller players.
Well, I think that's a very important takeaway, I guess, even for some of us in the audience here, that from an era where we used to actually look for a one-size-fits-all approach to having a more collaborative partner ecosystem, going back to the same phrase, and looking at specific applications that deal with different aspects of what you're seeking, right? And being more embracive of fintech than just looking at it from a pure play solutioning standpoint. Last question. I know you're not a technologist, and I completely appreciate an operations head's perspective on this. Look, one of the concerns that has been brought up time and again has been about data, and we talked about data being the new oil, the new gold. There was references to data privacy. There were discussions to data security, and somebody was referring to cyber security. And I am not getting technical here, Paul, but I do want to hear from you. As you embrace technology and as you embrace, let's say, fintech, where you're exposing your, let's say, your data to multiple, let's say, platforms in using them, and as they are in cloud, for example, and you are engaging with, a new set of quote-unquote partner ecosystem that was not existent before. It also makes the bank that much more vulnerable, should I say, or let's say more, the need for actually being more secure, aware is high. Thoughts around this, and what does it mean, if one is actually looking at quote-unquote next generation transaction banking? What does it mean, for bankers to be resilient and careful about data and data privacy and security?
Wow. Okay, so I'll pick off a few things that I think are important subjects at the moment. I think a gentleman earlier was talking about the encryption of data at rest and data in transit. I think that's a very, very important element that we should be investing in. I think there is also a challenge of where you've got services in the cloud, but you've got, but then to consume those services, how do you look after your data, try and keep all of your data either on-prem in your current solutions, or if obviously if the data is in the cloud, it's encrypted, it's with the bank's encryption keys, not the vendor's encryption keys, and things like that. I think that there's other challenges that we've got to look at, and that we've been using two-factor authentication for quite some time now, but it's not just about that two-factor authentication. It's who's logging in and using that two-factor authentication. Where are they logging in from? So those are some of the questions that we need to make sure that we've got robust systems and governance over other things like DDoS attacks. You've got to ensure that you've got good controls over that. And an area that we just touched on and talking about blockchain, but investing in how you manage your keys on blockchain and areas around that. Perhaps not my expertise area, but lots of areas where you need, there's got to be quite a lot of thought.
No, I agree. I mean, totally agree. And I think, you know, it's hard to ignore them as you move along. And I guess governance is the name of the game, right? I mean, unless you actually are well governed, it becomes hard to be confident that all of this is actually giving you you can't sleep at peace at home, right? So that's the whole point. Well, I guess Ojas has been signaling me that I should accelerate this. And,
I felt you were hurrying me along.
No, I'm not. I mean, in fact, I'm opening up to the audience to ask you and make sure we have more of you, Paul. Questions from the audience. I see a hand go up there. There's your friend Chetan up there.
It's going to be a difficult question. If it
we've decided that it is difficult, Chetan.
Yeah.
Hi, good afternoon, everyone. So my question is on some of the innovations which Bank ABC worked on transaction banking. You have a very unique value proposition to across multiple markets, right? From a most mature UK to some of the markets where still clearing is not real time. So when you look at innovations on supply chain financing, on interesting payments or trade, how do you make it relevant culturally to those markets which haven't even seen basics yet? So how do you take same transaction banking across the group and across markets?
I think it's a very good question. Thank you for that. If I can just take you back to a program that was very close to my heart, which was the rollout of our upgraded trade finance processing system. Before I came in, we had basically 11 separate trade finance systems, all from the same vendor, completely configured differently. And we actually got people over to Bahrain from the 11 countries, put them all in a room, and allowed them to argue it out. Culturally, they came together. Trade finance is trade finance. Yes, in some of the databases, I've got to keep some of the names in Arabic as well as English. Yes, some of the central bank reporting is a bit more complex in one country versus another. But actually, it's all the same. So we got them all together. And for the whole of the approach that Bank ABC is taking now is standardization. So get everybody in a room, standardize everything. You know, we have a standard SWIFT gateway across the group now. We have a standard trade finance system. We're hopefully going to have a standard core system in the next few years. Watch this space. But culturally, we're not that different. We just have to talk to each other.
Thank you. I guess that was a good question, Chetan, and I guess some of the members in the audience will also relate to this. That one of the challenges that we actually have, and it's not just in Bank ABC's case, right? I mean, when you deal with banks, particularly who actually have presence in multiple countries, the tech stack always becomes a factor that, you know, is of consideration. I mean, are you having the same platform or not? But you just gave another variant to it. It could be the same vendor and the same solution, but configured differently, and that could be as good as having, you know, multiple systems there, right? Well, I guess I've been signaled that I'm standing between the next panel and lunch thereafter. if there are no other questions, then I would take the opportunity, Paul. I think I think it was good to actually start with how it was in the last century, as you started with, to where things are moving and the opportunities we are seeing in the next gen transaction banking, not only from a technology standpoint, but the innovation that it actually comes along with, which obviously makes a big difference to the corporate segment and not just the retail one. Yeah. Thank you once again, Paul.